Next topic before we start getting to some questions from the audience here. You're both former Goldman Sachs bankers, portfolio managers, and now we're in the middle of some pretty significant bank earnings reports. What's your take so far this earnings season on the banks?
They look pretty good. I think the big money, woo. Some of a lot of the big money center banks have reported. The stocks have done well on the back of those reports as they've given guidance on net interest income through the rest of the year. And what's interesting to me about that is, net interest income is, of course, the interest they're earning versus their cost of money, which is essentially rates. And so it's almost they have to have a view on rates or have hedged them in some way to really lock in what they think their net interest income is going to be. So whatever they're saying in these earnings reports, if rates move in a way that they haven't predicted, it could all kind of not be true. But right now it suggests that the economy's doing well. They're not taking huge loan loss provisions, which suggests the consumer is still holding in there. And it's full speed ahead at the moment.
Yeah, I have a slightly different view. The stocks traded kind of wonky coming out of earnings. So they did well when the entire market started to raise. And I think that was more of this call it dash for trash or a value trade. But when they actually announced earnings, we talked about this earlier, the stocks traded off for the first few hours. And a lot of it comes down to quality of earnings. And we think about bank quality of earnings, there's kind of two different places that banks can get their earnings from. One is a very consistent business that repeats year after year, which is the net interest margin business that Adam was talking about. You make a loan, you're going to make money on that loan for the next 3, 5, 10, sometimes even 30 years if you're lending on mortgages. And that's a very stable business until the economy starts to run south. And that business is doing fine. It's expected to hit some headwinds as, interest rates are a bit less stable. The business that's really driving earnings right now is a bit of a lower quality business. It's the investment banking business. So I think that Goldman and Morgan Stanley came out and they said their banking business was up by, anywhere between 30 and 50% year over year. And it's great to see that economic or that cyclical business doing well because it means that we're seeing some of the gridlock in transactions start to ease. But there's just not as much of a value or valuation placed on those earnings because you have to go and actually, you start from zero every quarter when you're looking at transaction-oriented earnings. And so the market places a lower multiple on the earnings that must be regenerated each quarter than they do on the earnings that are consistent and recurring. And so even though they're doing amazingly well on the investment banking side, the market isn't necessarily giving them the credit for it because they think next quarter could be a tough quarter. So it's trying to figure out are they quality earnings or are they the lower quality earnings? And then what valuation should you put on those earnings? And I think the market's still trying to figure that out right now.
I think there was a fear that the banks were going to be worse.
Yeah, for sure.
Which is also, that's another thing, how to disentangle and understand the stock reaction to earnings is what were the actual expectations. And not just, the EPS estimates were $2 and they did $2.05, so it's good. It's more of that's a collection of, Wall Street research estimates and the consensus. But what did people really think is sometimes a very different number, or people expected it to either exceed that. Particularly when you have when everyone's very bullish on something, you expect it to beat, and it only beats by a little bit. It shouldn't beat by more, or you expect it to, the opposite can happen as well. So it's hard to untangle it. So maybe quality of earnings is a good way to think about it. But I think there were people that were very worried that the bank earnings would show that the consumer is starting to crack, and as of yet, I don't think that that's come through. And of course, earnings are also backward looking. So where we sit exactly today is not where we were 3 months ago. So we're always trying to catch up to what reality actually is.